So good morning. As always, let me post this to my associates. So Friday GBPUSD. So trading another day, another another day, another dollar. So we save that and then we go live. So good morning to everyone, and I hope you are okay, and I hope you are faring on very well. This is Friday. It's a weekend. It's a weekend for sure, for sure. For sure, it's a weekend. And being a weekend, the week ends today. The week ends today. It has been a very tough week, as you have seen. So we cannot complain that, not even complain, we cannot expect the market to always give us profits. So thank you for joining me today. Friday. There is possibly not going to be any trades being taken today because today is Friday, unless of course the markets want to align. So today is a new day. Let me send this to who? To people on. To my people on Telegram. No, yes. So when you write there another day, live, another live trading day. So for those who are on Telegram, they should be joining us on in no time. So for those who are on Facebook, welcome once again. Welcome once again to this live session. It's a pleasure to have you here. And I hope you'll learn and capture many things from the market. So we first begin by analyzing what happened yesterday. Did we take any trades yesterday? And if so, what was the outcome? So yeah, welcome. Availing yourself trade every day is not easy. Preparing your mind every day to take on the financial markets is not as easy as it looks. There's a lot of dedication behind the scenes. So As I am patient with you, you should also be patient with me, because this life demands some patience from each other. Alright? Yes, so welcome everyone, the 7 of you. We might have more people, we might get to 20 people, 30 people, but what matters is you who has come here to join our live trading. So welcome. This is a trading cyborg, and today we are trading GBPUSD. GBPUSD. So first and foremost, if you have never been on this live chat again, you have to know that on these live sessions we only trade GBPUSD, but we do analysis for other pairs like gold, Euro USD, US30, or whatever pair you would want us to analyze. Okay, but my live trades, the trades I take on my MT4 are GBPUSD only, and I don't take these trades every day. No. For example, yesterday I never took any trade. Why? Because there was no confirmation. So we shall go over yesterday's trade and understand what happened. Alright? Yes, so thank you once again. Let's start the business of the day. Let us start the business of the day. So we start from the daily time frame. Now today is a very interesting day, by the way. Today is a very interesting day, and we shall begin this day by just outlining and marking what we talked about yesterday. Alright? So yesterday we began by denoting or doing a multi-frame analysis, multi-time frame analysis. So we began in the daily time frame, and if you remember very well, I told you one thing. When price gives us information, because price is always giving us information, and then we take action from that information. Hence the noun price action. Price action. That's the first thing. So every day we are receiving information from the markets, and we utilize that information by executing, by taking action. So hence the name price action. So yesterday, or rather this week, my bias for GBPUSD has been a buy, but the confirmations or the entries have not been have been vague. The confirmations for this market have been quite vague. So let us start by doing a higher time frame analysis from the daily time frame. So yesterday we denoted this daily OB here. I can even draw it for you to see. Remember what I told you, some weeks are going to be tough, but what matters is that we are protecting our capital as we wait for the better opportunities, because the better opportunities are not yet here with us. So in the daily time frame, Well, there's also this. We shall discuss all these things in a minute. In a minute. And remember, this is the live. This is live. We're not replaying anything. We're not trying to replay or trying to reverse. So we don't have this replay button on and off. We're in the live market. There's no before and after here. It is only now. Okay. So right now you're only focusing on now. What are the opportunities right now? Not yesterday. Now. We want the opportunities now. So yesterday, the first thing we talked about is that we wanted price to react off this order block, this daily order block. But there's another important thing we said. If price closes above with a candle, an energetic, strong candle like this one, so we said one thing. If price closes with an energetic candle, the first thing we know is that this level is officially invalidated. Alright? And then when it closes above these swing highs, this was the previous week's high, that is on the 13th of January, and this was our potential high of the week as of yesterday, but it was destroyed by Thursday's price action. So what happened? Price closed above this level. So the whole sell narrative is nullified unless we get new information regarding the market. So we drop down to the 4-hour time frame. Now we are marking our new what do we call them now? We are marking our new territories. And this is something I want you to learn every day, that as soon as your market bias is invalidated, because as I said before, the market will do what the market wants to do regardless of our strong biases on the market. So if the market wants to sell and your bias was a buy, the market is still going to sell. Now, it is not for you to fight the market. It is not for you to fight the market. It is for you to react. You react from the information the market is giving you. Okay? And that is the only way you will be a winner in this game. There's something I wrote the other day. Let me read it for you. So what did I like the other day? This is what I wrote the other day. Not this one here, not this one, not this one. Yes, this one. But many people never understood it. Predictions lock you into one outcome. So if I predict that I'm going into a buy, and I hold on to that belief for a buy, what I will do is I will force the market to buy through something called the confirmation bias. So as traders, most traders are looking for what is called a confirmation bias. They are looking for what aligns with their beliefs about the market, and then they use those beliefs to force their trades. I don't know whether this is I don't know whether you guys are understanding me. So when you predict one outcome, you put yourself in a cage, a mental cage, whereby you think that that is the only way the markets will go, and this is how people lose money, billions of money, millions of money, because you are forcing the market into one outcome. But scenarios keep you flexible. Scenarios keep you flexible. So for example, yes, our bias was a sell, but we kept our scenarios flexible by saying that once the market breaks this level, or even better, breaks these highs, then we have new information from the market. Alright? So, professionals prepare for multiple possibilities. They respond instead of reacting. That mindset removes the emotional attachment to being right. Because if I lock myself into a buy scenario or into a sell scenario only, I want to be right, and I want to show my people that I am always right. So generally, your trading will improve when you stop forecasting and start planning your responses. So for example, right now we can plan our next response. Alright? So that's the daily time frame. And this week's high and last week's high have been violated by price action, yesterday's price action. So we dropped the 1 hour time frame. Now, when we drop the 1 hour time frame, we talk about yesterday's trading day. Now, yesterday's trading day was such that we were waiting for price action to close below. We were waiting for price action to close below this opening Asian low. So the stream ended at around 11 p.m. when price was still hovering around this area. Okay, so price tried to break this level, but it was not. That is the importance of waiting for the entry signal. We might do a lot of analysis, but if we don't wait for the proper entry signal, we lose out on a lot of money. We lose a lot of money, by the way. Okay, so yesterday's price action on GBPUSD, I waited for price to close below this level, but what price was doing, it was closing this level with, it closed this level with a week. And remember, we said unless price closes this level with a body, then there is no need for us to get in at all. So price closed with a week, and then it came and retested came and took out the Asian low. That was the Asian low. Then after taking the Asian low, it came and swept more liquidity down here at just before the New York Open, and then from that point onwards we had a buy during the London session, during the New York session, whereby we went around how many pips? Around 72 pips. But with this, our bias had already been invalidated, our buy bias. So this was last week's this was last week's plus this week's high invalidated. So with that, we ask ourselves one question, one simple question: where is the next possible best entry level? Because if our bias changed yesterday, or if the market invalidated our bias, the next thing we want to do is to find an entry in the direction of the market. So that is why we pull out our fib. Work on your audio with all due respect. Hey, you want me? You cannot hear me. Alright, I hope now I'm audible. I hope now I'm a bit audible. So today's price action is simple. Being that we are in a Friday, our best entry level will be our best entry level will be to that level. So that is a sweet spot. Alright, we can also check today's news and see what the market has in store for us today. So sometimes we get out of the market at break even, sometimes we get out of the market with a lot of profit, sometimes we get out of the market with little profit. So every week varies, and it's not up to us to, as long as we are doing what our analysis says, that is what truly matters. So we have news today in the evening or during the New York stock market open. Also today I don't take a lot of trades on Fridays because unfortunately Fridays are not the best liquid days. The best liquid days are Mondays, are from Tuesdays, Wednesdays and Thursdays. But if Tuesdays, Wednesdays and Thursdays are not quite clear, we don't force the market to give us a hand. So unless the market can get to this level, it will be best that we don't take any trades. But we have a fair value gap here, so this is a fair value gap. This is a fair value gap. So that is GBPUSD. And then we have Euro USD. So what the market is doing now is that it is invalidating these levels. For example, for GBPUSD, the general consensus is that once price breaks through a sweet spot level, especially a higher time frame sweet spot level, then that is also an indicator that the intended bias, for example, our intended bias was for price to tap into our sweet spot level and then trend downwards. But once price action breaks a significant sweet spot level, especially in the 4-hour time frame, in the daily time frame, then it will be in your interests as a trader to also change your opinion immediately, and you do it shamelessly because you don't want to fight the market. So this is where revenge trading comes from. This is where impulsive trading comes from. This is where bad risk management comes from, because you want to be stuck into one belief that the market must react off this area and give you what you want immediately. Let me tell you, if it was that easy, 95% will not be losing money. 95% will not be losing their money from trading. And when you Google 10 reasons why traders lose money, let us Google 10 reasons why traders lose money. So here are 10 reasons why traders lose their money. Number 1 is what we have talked right now: lack of discipline and emotional trading, making impulsive decisions driven by fear or greed instead of a defined plan. But instead of saying lack of discipline, because no one wants to be, everyone has a plan, but sometimes the deeper issue is the beliefs we have about the markets. So when you see someone is trading emotionally, it is their beliefs about the market. They believe that once they have set their analysis and they have set their biases, that they should be right. So you end up being driven by greed, because being right is an outcome, or it's being greedy is an outcome which comes from thinking that the market is surely is going to go your way 100%. So you become greedy as you wait for the market, as you wait for the market to give you what you want. Number 2 is poor risk management. But I wanted us to understand number 1 first. lack of discipline, and emotional trading. So, once this level is invalidated, now the only thing we want to do is understand where price is going and possibly get a good entry to but I still don't understand why we are on a buy yet all the hedge funds are selling. So we shall wait for the next week's CFTC report and then we shall compare data again. Maybe they are putting more positions and that is where an entry is important. Where is gold? Where is GBPUSD? I cannot see the pound. Alright, we have the British pound here. So, as of now, the information we have is that the non-commercials are adding more positions. Their major positions are on shorts. And they also removed some short positions and added to the long positions, but majority of their positions are short positions. So let us check USD. So as everything is going badly, for those who trade USD, you must be having a very good week. So the good thing about USD is that it follows price action very well, especially when it aligns with good price action. It gives us profits which are unrestrained. That is, you don't have to struggle to get these profits. So for USD, what we had analyzed yesterday was that we were waiting for price to come and close this new week opening gap. And sure as hell, price came and filled this new week opening gap and it formed a very clear low of the week. And we can observe this well in the 1 hour time frame. So yesterday, you can see my analysis was we take out this level, then we buy. So this one went around more than 1200 pips in how many days? 1, 2, 3. So you can see for US30, there was clear price action. So price action on US30 did not behave like price action on currencies this week. So you can see we clearly began by selling from Monday, on Tuesday, then on Wednesday, that is when we formed our low of the week. But when we check GBPUSD, you can see that we begin by immediately buying and forming the low of the week, high of the week. Alright? So price action for currencies this week was not only confusing, but if you never had your risk management intact, you probably were taken out. Or some people will say this was our signal for our low of the week. So now when you have days like these, they are called the long range days, when the price action is not very clear. So when price action is not very clear, such that we cannot see whether it's a high of the day or a low of the day, that is where good entry confirmations come from. But US30 had no problem giving us profits. So one hour. So Monday we formed a small low, Tuesday another small low, Wednesday we formed the real low. Price came and filled this fair value gap, and then it also filled a sweet spot level. So how do we see this sweet spot level? So that is the sweet spot level. Stroke. Sweet spot level. That's our sweet spot level. So once the market closed above our entry, it came back for a secondary entry, but that was very late, and then we continued buying all the way up to yesterday and possibly until today. So this is an example of a clear price action week. A clear price action week where we first have the manipulation from Monday, Tuesday and Wednesday. Then we have a clear distribution from Wednesday, Thursday and then possibly Friday. So for those who trade indices, that was a great week. For those who trade currencies, the week was not very enticing for us, and we say when the wick is not enticing, what we do is we don't internalize it. We don't attach our self-worth to a particular trade. Right? So unless the market truly wants to come to these levels down here to give us better entries, for example at this level, I will not even take a trade above. So if you ever wondered why some traders make money and then lose it all, this is the reason now. So today might not be a very good day to get in the markets, and as I said, we are gathered here to understand how price action moves. When there is a good trade to be taken, we shall do that immediately. When there is no trade to be taken, we shall not take that trade. But what I'm seeing for this week is that most moves have been happening in the New York session. But that does not invalidate our session or our week, because last week was a good week. So we can have a good week sometimes, but overall, if we are careful enough, we should get enough pips, at least 50 pips for the month to sustain us, or even 200, so 50 pips every week. So this week the only trade we have won is this trade here. So some may have lost on this trade, some may have not gotten in, but what really matters is your risk management. That is something I cannot stop insisting on. It is only your risk management which is going to save you. And when you truly understand what risk management is, you will never at any point of your life risk more than you should at any given time or any trade. So I'm thinking today's market is also going to buy, because well, this is an accumulation here. So the market moves in cycles. We have talked about this severally. So the market moves in cycles like this. First we have an accumulation, then we have a displacement, or a Judas swing, or a fake move. So the Judas swing is what we call the fake move. So this is what we call the Judas swing. And then we get the real move. So this one happens almost on a daily basis. So mostly when I don't spot such a move, when it is and it's clear, I don't like to get in, or I try to use smaller lots compared to what I use when the move is clear. For example, this US30 move was very clear. So we formed the low of the week, then we bought. It was very clear, something very clear. Although there was a fake move on Tuesday, but on Wednesday we were able to get that good trade and get into the markets. So for GBPUSD, if we don't have that same momentum, then that trade becomes invalidated almost immediately. So this occurrence here occurs almost daily and also weekly. For example, this week it never occurred. Because this week the market has trended upwards. But last week we had a very clean occurrence. On Monday we formed a very clean high of the week. Before doing what? Before finding our way to selling. This is where we got these 50 pips here last week. Simple, clean price action. And also, I'm not sure that yes, the week on Monday, and the first week of January, we also had a very clean high of the week. So you can see sometimes the high of the week are clear in some pairs and sometimes the pairs are not very clear. So when you don't have a clear high of the week, the best thing you can do for yourself is not engage is fail to engage into that market that day. So the market came and closed below this level and then came and retested a clean trade, and then this will have been a trade, a good sweet trade, that is around 40 pips. And then the next day the market did the same, closed below with an energetic candle, a 1 hour energetic candle, closing below the market price, and then towards the New York session, it came and retested again and gave us what we wanted also. That is why if a trade is not very clear, it is best to get away from that trade. So 1, 2, 3, 4. So we also have the week of December, and yet December is not a very clear week. So this was the week of December. On the week of December, we formed a very clear high of the week. Yes, accumulation, manipulation, and distribution. That you are right, Margaret. So when the market is not providing a clear high or a clear low of the week. For example, this week, because we can see on that week of 30th December, we formed a very clean high, followed by a confirmation to the downside, and then followed by an entry, a clean entry of around 45-50 pips, before the market now came back on Friday to do a retest. So the market did a retest on Friday. Even the week of 22nd December, we formed a very clean high of the week. But unfortunately, the market never distributed correctly. So we only went some few pips, and the market kept on consolidating. I'm trying to look for a week which was not very clear. This week was also very clear. So most of the weeks, we have 52 weeks in a year. So we'll find that around 40 weeks will be good, and maybe 35 weeks will be good, and 15 weeks will not be very good. So this is the week of 15th December. So we are doing a bit of back testing. So this week of December, we also had a high of the week formed on Tuesday. So this week of 16th December, we formed our high of the week on Tuesday. We had a clean market break, but the best place you could have gotten in was around this 9 a.m. That is the London Open, and this went to around 70 pips, and then came and later it retested that level again using a very clean candle, by the way, before giving us more 60 pips. So this week of 1st December is a bit clear now. Now this one is something like what has happened this week. So this week, the 1st of December, we formed a very clear high of a high of Monday, only for Tuesday to come and take out these lows and retest a bit, and then we get in. But later, the market did what? Turned on us. So we can expect majority of the weeks are going to be great weeks. Even this week of 24th November. This was what do we call this day? It was a ranging day. But the next day, we had a very clean signal. By market closing above these significant levels and then retesting these levels for us to go in. It went around 98 pips. So the point I'm trying to put across is that most weeks will give you a clear, so GBPUSD looks like it has given us an entry to a sell. So if this 1 hour candle closes below, then that will be a good opportunity to go short as we wait for this sweet spot level to be filled. So we wait for it to be broken and then we decide on the risk we are going to use. So only 4 more minutes and then we can see whether we are going to go long. No, short, sorry. Short. Because if we can take advantage of this move, it will still be great. So that if price decides to get to this level and buy, although that seems like it's around 50 pips. I don't know whether price can do that, but once we get a confirmation of a sell, I'll also be going in. So let us wait and see in the next 2 minutes whether price is going to close below. Because basically the only thing which saves us in these markets are confirmed entries, and even if you lose money with a confirmed entry, there's no big loss. There's no big loss on your confidence. There's no big loss on your trust for your system. But if you just enter aggressively, there's always a huge damage on our psychology, because regrets take time to heal. So the candle closes should be at least be in the 1 hour time frame. So when the market we have only 1 minute. Price has closed below the opening price. So let us see how this candle is going to behave. Then you can think about getting in. So hold your horses. Hold your horses. This looks like a potential trade. So I'm in that trade. Okay, let me get in. Just a minute, I get in. So my risk is 10 pips, and my take profit will be around maybe 20 or 30 pips if the market is generous enough. And remember, for Friday's trades, we don't go in full force like we will go on Monday. No, like we will go on Tuesday or Wednesday. So let us see how this trade is going to go. My trade is based on the fact that price has given us a signal, and it is us to take that signal without even thinking. So my take profit is 1:3. But if I get the first 10 pips, I always take out something fast. So I only have two take profits. The first one is 10 pips. So around the first one is around 10-15 pips, like that. The second one is 30 pips. Always remember, we don't know why the market behaves, The only thing we need to know as traders is understanding of the market structure and knowing when to change your opinion when you are confronted with new information. And lastly, trying to follow your trading plan through and through. So for this trade, I've not put on heavy risk. Just because it's a Friday. So this market's week, this price action for this week has not been the very best. The best price action was last week, and that is the nature of trading months. So every month has 4 weeks, and 1 week is enough to secure profits for the whole week. So profits for the whole month. So when you secure profits for the whole month, what you do is that you don't engage in the markets. You engage in the market lightly. Because we can make money, but keeping that money is a whole different story now. So I would anticipate that this trade will come and fill this fair value gap just a bit. It does not have to get here. This is an overkill, or this is too ambitious. So if we can get to even this level, we get to the center of that fair value gap. So we get to that level. That will be very, very nice. Very nice. If you would like to maybe widen your stop loss, you could put it here and then target 1:1. But if the trade is a good trade, 10 pips are enough above this structure, this 5-minute structure. Because if it closes above this level, it means that this idea is effectively destroyed. And price does not want to come and fill this void over this level, over this area. So most people are teachers of the market. They teach. But when you tell them to get into the market with you, now that is where they draw the lines. We shall be here doing this from Mondays to Fridays. At this point in my life, I'm at least able to be calm even when taking very huge trades, because the only thing that matters to me 100% is the risk I have put on in relation to my capital. For example, if I had put a whole 1% risk, I would be very uncomfortable right now, because I know today is a Friday and anything can happen on a Friday. Also, if the market stays for the next several minutes without but anyway, this is a very small trade, so I don't mind being taken out. So my thought was that I'm going to get out maybe normally after I get out after 30 to between 25 to 30 minutes, or even 40 minutes. If the trade is not moving at all, I just get out, because now that is playing mind games on me. But since this is a very small trade, there is no issue even if I'm taken out. So let the trade do what the trade wants to do. So my bias for Friday is a sell. Since price has showed us that it has broken the previous week's highs, closed above significant daily order blocks. So the first thing we shall do from Monday is to check the CFTC report. We have to know whether these two things here are going to change, whether the long or short are going to change. It is moving very slowly, but we shall wait. So we are in slight profits. I don't like I don't like doing what? I don't like putting break even on my trades. For example, when you're in profits, what some traders do is that they put a break even just below their stop loss at that level, such that whatever happens, they will not lose anything. But sometimes you will agree with me that the market is going to come to this level, take out your stop loss, then continue in your direction. So there's no need for me. You have to have at least some confidence in your trade to get in it. So for this trade, I'm thinking, okay, I'm not sure whether you're going to get to 15 pips or even 20 pips with this slow movement. You just have to wait until around 11:30. Then we shall see. We shall see. These markets are filled with people who are trying to. They only want to show us the after. They don't want to show us the process. But the process is what really matters. Do you feel me? The process is what truly matters. Because even if I took the profits and you never understood how I got to that point, it is all useless. It's a slow Friday, a very slow Friday. Remember, not all Fridays are going to be like this. Not all weeks are going to be like this. Some weeks, most weeks are going to be very good weeks. But some, no, these are the times now. So it seems like the market wants to take us out of this good trade. The good market wants to take us out. It's almost 25 minutes since we got into the trade without any movement from the market. Now, normally, once 25 to 30 minutes are over and I am not in profits, I just exit the market because I know that a good market will not waste time giving you your desired profits. We are still in some very small profits, but I'll wait for us to either hit the TP or get to the stop loss. This market is quite slow. Tomorrow we shall also be gathered here to analyze the markets and see how we performed this week. Now, you tell me, if you're in such a market, are you going to wait for, because clearly this is a signal we are getting from the market. This is information the market is giving us. Because remember I told you, a good market, once you get in, immediately you start swimming in profits. But a bad market will punish you. Will punish you terribly for nothing. You have to be patient. Even if you're only three, let the market do what the market wants to do. So it has begun moving, but it's moving towards our stop loss. So as I said, the risk on today's trade is not very high because today is on a Friday, and today being on a Friday is when we protect much of our weekly profits. So however this trade goes, it is okay. But since it has taken too long, I wish to get out of this trade. Or maybe come back or leave it. So I would like, if you have not yet gotten out of this trade, that you prepare to exit. We shall meet tomorrow again to discuss this week's price action for maybe 30 minutes before I log off for the weekend. Some people have the patience, or maybe they lack data to know when to get out. But this kind of trade is a trade which you should have gotten out a long time ago. A long time ago, if it's not giving you the intended profits which you would want. Alright, so we have been taken out. So I'm assuming that price does not want to come to this level, so it's going to continue on this level it is right now. So one key lesson I've taken away from this week's trading is that once the price action is not very clear, that is, if I cannot spot a clean low of the week, but anyway, we say we are collecting samples. The sample can either be right or wrong. So when we have around 300 trades, then we can analyze for any similarities. For now, we're just collecting samples. So today was an example of collecting samples. Today was a simple trade, a low risk trade, a very low risk trade, by the way, very low risk, about 0.25% of my normal risk. But the market has not responded as we would have wished. So tomorrow I'm going to be back for maybe 30 to 1 hour to analyze the occurrences of this week. How has the market behaved this week? And then maybe we can also meet on Sunday to analyze what we want to see from next week, if I will have time. So have a great weekend and thank you so much for joining me in these live sessions. I don't take it for granted.